Greetings, market rebels. Welcome to this week's sector situation. It's Sunday, June 11th, 2023. It's about quarter after 12 or a little after noon here on the East Coast. I'm Wayne. My partner Ryan's flying back from, I forget what airport, but from the Sonoma experience. We had a nice live event out there, from what I understand. Things went well, so that's good. Hopefully he's having a good flight. We'll get the market outlook out later today, as we typically do. There's a trusty disclaimer. There's the trusty intellectual property rights notice. Excuse me. And I'm just going to flash the stream from the macro measure. This way, if you don't catch macro measure, maybe you could decipher some of these hieroglyphics to just see what we talked about there. There's a lot going on. This list could have been much longer. The video could have been much longer. It's just, hey, we're in some interesting trading times and other interesting times aside for that for different reasons. But that is that for now. So I'll let that stay up there while I just pull things down. Going to stop the share, and then we'll get into the sectors. So let me just reduce I want to get rid of that there and start to share a different screen. Let's see if I like to do is just move my sectors over so we can talk about them. And you know what I think I may do is I may start out just with a quick flash on those, and then we'll move them out of our way so we can talk about things a little bit better with better views. This, I guess, can be tough on my screens. It's fine, but it could be tough maybe on a smaller screen. But this is the typical grid of 12 that we start with. And you know, my quick take on it would just be that, hey, last week didn't finish all that well. It was a little messy. And there's nothing wrong with that. There were some really spectacular moves over the last, let's say, week, and we'll say a half just to make it easy, probably a little bit less than that, but some things that were really lagging, right? And we were talking about that as we're so many. The last few weeks, a lot of things have really come to life, and that's being cheered, and it could be a good thing in the long run, could be legit. I feel like they chased things up sort of spectacularly too quickly. And I don't know if this is how I would want a bull market to really broaden. If it works out that way, great. I'd rather have things not jump so much in a short period of time just to catch up a little bit. I'd rather have things start working their way up, and maybe the big XLK or tech pause, and then other things start coming along for the ride. But that's not how they roll these days in a lot of cases. So as you can see, if you just take a quick look, right, I'm calling it a little messy because, for example, communications, which had been doing well, kind of finished the week, and you had barely a change. Meanwhile, energy, which had a good run, XLE pulled off. So it's like, okay, couple little, nice standouts here with XLK. XLV did okay, but you could see that it's just mixed, right? It's mixed and messy. There's nothing really wonderful happening here. I do think we said something about XLY maybe starting to do better last week, so maybe some folks found some ideas in there. But overall, to me, right, with a lot of things that happened, these two, XLB and XLI, backed off after having a big run on Friday. So that's what I mean by like just kind of closed, messy. I think there was some profit taking, that kind of a thing. But I think what is interesting right now is the XLU kind of coming off the bottom. You might say, well, who cares about the XLU? And a lot of times we don't care, but this is typically seen as a defensive sector, right? So maybe there's a start that we just saw here of folks thinking it may be time to get defensive. And given everything we talked about in macro measure, from the obliterated put call ratios, the immolated VIX, I think it's probably time to start going along volatility. Even if you don't buy your entire intended allotment, right? I would still think about Phoenix portfolio class that we've got, that style of positioning, at least a little bit right now. We kind of saw that VIX scenario possibly developing, and it did. And now they've got the VIX with a 13 handle, maybe on its way even lower, depending on what happens to the FOMC reaction. That could be a good thing to kind of position for maybe late in the year, or even as far out, as March of next year or something like that. Not necessarily the VIX, but just if you want to acquire some downside vol, thinking you're going to see a correction in certain stocks or sectors between now and then. But overall, right, kind of a mixed situation. What I'd like to really do, you can see the RSI readings here with the labels we've got. Sure, right, the usual suspects we've seen this year, XLC, XLK, they are still close to overbought, but the XLI move was extraordinary as well. So that might be something, and XLY as well. Everything else, well, I shouldn't say that XTN was higher than I realized. Everything else kind of middling, right? But we'll try to make more out of these on the larger chart to see what we can do. And we'll cover the other things that we do cover. May as well start with SMH right here. So you could check out the RSI readings. I switched my setting on this RSI reading. So this RSI label and then this RSI information down here where my arrow is, I switched those so that they're consistent so no one gets confused. But I just wanted to highlight SMH. We'll get started since we're here already. But this is, if it weren't even for the FOMC meeting, which I think has to keep you open-minded, in my opinion, you have to just say, well, this could go either way, right? Because you had this big, it's kind of like it's kind of like a flag situation. And you did have a little bit of corrective activity, and they've corrected this, and now the RSI is still, though, in SMH still up there. That just because this became so extraordinary at this point, remember they backed it off the high, but on the close that day it was at 77.50. And this is why I point this stuff out all the time, because it's not like it immediately has to go down in a big way and reverse. It's just that if you notice that an entire sector is up near practically near 80 already, and you're this far beyond your Bollinger Bands, even if they are relatively narrow, it's still, right, that's still not the first inning. You're not in the second inning of that upsurge, right? So you really have to be cognizant of that, in my opinion, and then go from there. But certainly this has bullish elements to it. And then other people would say, well, if it kind of doesn't take out that high and then sort of starts reversing from here, it could be a lower high. If it pops up a little bit and then reverses, it could be a double top. These are all true, and we just don't know. So you're holding above the S10 SMA, and it's then, and all of the SMAs are stacked and they're all positively sloped. So it's pretty hard, I think, to be a technical analyst to say, well, this thing's really in big trouble right here. I don't think it's necessarily in big trouble. It could be, right? If this low gets taken out and you start to see risk off, yeah, it's probably in trouble. It's got this gap here. Certainly, right? It could work its way back down to the 20. But until really, it's going to be hard, because even if you start seeing selling, and there could be, I mean, a lot of things did end still overbought, even though it was a little messy. Could be a little bit of weakness, could be a little strength in front of the Fed, right? That's their last chance to goose things without the Fed really potentially mucking it up. I don't know if they will, but just potentially they could. But yeah, we've certainly seen extremes to the upside that are greater than this. And we've also seen, reversals when things get sort of this overheated. So it is what it is, and you've got the wild card. So not everyone likes that, but that to me is the honest, objective way to assess this. And I think that the answer then, well, what do you do then? Well, you wait to see the price action unfold. You see if there's some momentum. If they start reversing this and taking it above this high, then you say, okay, maybe they're going to attack the highs, and you get in for a possible attack of the highs, and you monitor the trade as you always would. What if you think, oh, well, this thing might have put a lower high in and now it's reversing lower? All you really have to do, of course, on that is to put in a little bit of you can use the 10 SMA if you want, or you just put in a nice little support line like we just drew in here, right about there, I think is roughly a fair place to put it. And then you fall below there. You could even get in a little earlier than this low if you think we do reverse back down. And again, it's all about position management, trigger management anyway. So you can do whatever you want, but in front of the Fed, you might have limited opportunities because a lot of things could square up and they could reverse in front of the Fed, after the Fed. So it is what it is. And I can't wait till we're beyond this week. But what I wanted to note, and I'll do this on a couple different charts, maybe all of them, but look, this thing made it back up to the high here, right on that recovery. So you really can't say, well, that looks terrible on a weekly basis. I'm not prepared to say that, hey, this looks awful. It doesn't look awful. It's getting concerning for sure. It has been concerning. It's at a high where it struggled before, or at least near one, near a high range, that is. So yeah, you should be careful here, but you're not in the first inning. I think that's the bottom line. You should be careful. You should still trade it, though, even if it is the long side. You just need to be very observant and disciplined as usual. I mean, that's almost always the case anyway. So I don't see any signs right yet. It needs to break something for me to say, yeah, that thing's looking like it could reverse. But that would need to have really good confidence that you're seeing a reversal after this kind of manic jam job. You would have to be beyond the Fed, because we know that they can not that the Fed would even really legitimately say anything about semis or stock valuations or this, that, or the other thing, but these guys will take whatever they can latch onto, spin it, and then have the TV talking heads tell people, well, this is why the market's rallying, or this is why the market's falling. And a lot of times it's just sell on news, or the equivalent, right? Short squeeze on news. So anyway, there's the quick look at the SMH. That's where you're at. You're overbought, even though you've had really a week and a half to 2 weeks of what I would call a healthy corrective activity, where you've retained most of your gains that have been made in the last 6 weeks from really early May. You've retained most of those, and you're not too far from the high, but at the same time, you're still overbought because it was absurd what happened in there in the short run. So that's that one. Now let's just go down our list. We'll talk about our some of our main sectors kind of out of order a little bit, but this one is important, and the other ones are important to at least the way I like to look at the market. And the thing about energy is it's been downtrending, right? So I put these white ellipses in there, and I'm going to flash the weekly view for everyone on this one as well, because if you look at this now, right, this sort of has a double bottom, or at least a similar bottom, maybe a slightly higher low put in on the weekly. And if it were to come in and get through there, right, and that's about, well, let's just ballpark it at 84. It could break free of this downtrending action and could try to work its way up, another 5% or so. It would have to get through this high for sure to do that, of course, but that's the way that's looking at this point. If it does kind of break through there, we do still stick with this levitation. And remember, if you look at macro measure, that video, you'll know that we're in an interesting point, because the sweet spot in the third presidential year cycle carries us really until about sometime in July. So we should be good to go if that analog, or that, basically that path is what we continue to follow, or at least try to follow. And but at the same time, right, mega caps that have really led, that are due for a pullback, they've also had rough Junes over the last 10 years when they've had really strong performance. So it is what it is. It's a little bit of counter argument there, but that's the XLE view on the weekly. You can see that, there's nothing wrong with the RSI. Because that thing's sort of been dawdling around. There's nothing there. Even the daily RSI, nothing there. And so, I think it's very clear that you could start trading a breakout if you get above Thursday's highs, and you'll be back above the 50. And if you don't do that, right, it's still kind of in messy territory. We did start to see a few things crop in here. So I'll mention that in the energy space that were ostensibly bullish, but it's still downtrending overall. And I would feel like until this high, much like I've been saying about the spiders now all year long, until this high is gone, and it's not just on some squeeze, you have to really think that you're still in a downtrend. And that would probably, given how this downtrend line up here is, this resistance line that I've got in there, that's waiting for it too. I think you're still a long ways away from calling the downtrending action as over or finished. Another important sector that I like to check out just to see how things are flowing is the XLF, the financials. They came alive. There was some interesting KRE put buying activity again, and some concerning signs cropped up again. Just want to mention that in UOA. But this held its own overall XLF, that is. And if again, we've got to, as much as if this doesn't jive with my macro econ take, if I look at this chart objectively here, I see a little bit of a mess, but you also see higher lows on the weekly, right? So you've got higher lows getting put in, and this thing could start to work its way back up. So I think that's, you've got to give it its due. You can't rule that out. Who knows if the Fed once again sings a tune, or they can spin it so the Fed sung a tune that was what the market wanted to hear, and the bulls do their thing, right? You might get that melt up that we've been hinting at for a while. Excuse me, but you just can't hate that chart at the moment. I think on the weekly basis, it might have sort of double bottomed, and they've been working up. Now they've got higher lows, and all they really need to do, which doesn't sound like much, but it looks like to me, if they can get through 34, there's not a lot in the way at that point for it to move up another 3, 4, 5%. So moving it to 34 requires a couple more percent before they even get there. But again, the Fed is obviously a big deal for financials, so we'll see about that. Short term, though, clearly right at 60 on the RSI. So approaching overbought. It's got the 100, 200 waiting for it. Right near 34, the 150 SMA on the dailies there. And that's why I'm saying that get through there, then you maybe could have better ease of movement right through that next level. Another one that I like to look at is XTN. And we've been saying, look, these other they need to rotate it into these other sectors because they really milk the daylights out of the major mega caps that were responsible for nearly all the gains until a few weeks ago. And then late in that week, they finally started to ignite things and go. And they did, right? I mean, they came for other things. 64, even after backing off on Friday in the RSI here. So that, to me, though, right, this is classic where you break out, short pullback, find support on the 100, go again. Now you might have another pullback to the high that preceded the initial pullback to support. But that confirmed support there and went. And then that's a little bit of a sort of that confirmational sort of backup that people like to see, myself included. And now you made a nice run there. Let's look at this one on the weekly. And you can see that's even looking a little bit better, right? So again, giving it its due, you get through probably here, let's say 79-ish, 79 and a half, then that could end up starting to do something more. So again, despite my macro take being what it is economically, I'm still sticking with that. As of now, I haven't seen anything that really changes my mind about that with the stuff that I follow, but we're not trading it that way. We haven't been trading it that way. We don't trade it that way. And you've got it again, if they get through that 100-week moving average, that's a good start. Take out these highs here. Thinkorswim, take out these highs here, or at least close. That would be obviously the start of potentially something more. And you just don't want to fight against that. So I don't think that ultimately we just roar back, but again, I'd love to be wrong about all that. All my concerns were overblown. Nothing would make me happier than that in terms of the market. Now let's take a look at other things that are also can be telling. Here's consumer discretionary. This thing we talked about not doing so well, but look at the move that's had, right? That wasn't doing well for a while. They finally started coming after that and got kind of like, let the staple slide and rotate it into this. So this became a more risk on situation about a month ago at this point, because we're looking at a weekly chart here. So mid 60s on your RSI, right at the 100, 150 week SMAs. So, but you've got to say, right, give them their due. A lot of people are convincing themselves that the worst is behind us. I don't share that view. I think this has gotten a little ahead of itself. It's 73 despite having a rough Friday. I think this is another one that's kind of due for a pullback. But again, you can't get too confident when you've got that Fed monkey wrench that gets thrown into everything sometime on Wednesday afternoon. So that is that, but that's overdone in the short run. Yet you've got to give them their due that things are getting better and better. I think technically on the weekly, and they did go more risk on Now, the one we compare to that often is XLP, and XLP went risk on as well, right? Because this is these are staples considered more defensive, and they came down to below all the SMAs, as you can see on the daily, and you found support where you've often found support, right? In the low 70s or 72-ish. So these kind of have a little bit of a diamond unfolding in here right now, which I won't draw in the interest of saving time. That might, that's interesting. That tells me any pattern can fail, any pattern can deliver, but diamonds are thought to be sometimes reversal patterns. So maybe you do reverse, that would be more indicative of risk off for the market. And that would mean probably XLY, they're leaving XLY going into XLP, and maybe the market's overall being pressured. But right now, right, holding where you think it should, this is not out of the woods at all, right? To even start thinking about getting out of the woods, I think you need to be near 74.50 right now, which, like, okay, a big deal. It's a little bit over a buck and a half, a buck and change away, but this is not a big mover, as we know. So it's a decent move to get there, and probably right with the 50 waiting for it there in gold, you just wait on that to really feel better about it. But again, if the whole market's improving and they're taking this thing up, that would also be right encouraging. But this is trying to double bottom. This is coming out of being oversold. Things are improving a little bit, but it has its work cut out for it. So if we look at that on the weekly chart, because I'm going to do this on all of them this week, it's something different to do that could help us. There's nothing really great yet, right? You're seeing a little attempt to kind of hold and maybe reverse, but it's not there yet. So keep an eye on that. If you like to trade some real kind of grinders and that's your style, go in there, find some of those names and say, okay, well, I can do, maybe I like to do diagonals, whatever you like to do, but that could be useful for that sometimes. You don't get high vol typically, but to me, a diagonal is not really about high vol. It's about being kind of a grinder bull who likes to not get too surprised by things and likes to do a little premium collection, in a nutshell. So that's the other look there. Now, I think the XLC, we don't want to be remiss. I should probably go, I'd really prefer though to cover XLB and XLI. So these, right, these stocks to me are acting like, okay, I was saying for the longest time, well, where's the rally? Where's the global situation improving? Where's the domestic situation improving? Why aren't basic materials and industrials acting better? Because they were down here until recently. Well, they came, this is what I mean by going too far too fast. They came in and Bad Adel held this thing up that much. Now it looks like a big deal per point move, but just the visual on that to jam the things up that quickly the way they do. And then to me, like, that again is not the way that you ignite a long-standing rally. In XLB, you're at 53 and change, 54 rounded off now that you backed off here. But this is a little too far too fast, left the gap, not above the 100, gets above the 100, basically Thursday's high. Maybe you start attacking other things. We could bring this line across. That's probably going to come into play if that works out that way. And of course, I think Sim's giving me a little bit of a fight here. Let's see if I can get this to just come over for us. So yeah, you're looking at probably 81, before you start thinking, okay, there could be a real breakout from this downtrending action. It would need to get above 81, hold above 81, and then continue right to proceed. So it is what it is. I don't think, I don't think this is in a great juncture right now, but sometimes you can't get what you want in terms of, like, I'd rather the technicals were not set up the way they are. Here's your double bottom potential here too, though, right? And so that could be good. And I'm a guy that respects double bottoms. I think that, and double tops, I think they are a good pattern to keep your eye out on. I'm just part of what I do. I'm not super pattern focused, but I do like patterns and just note them where I can. And I do think that looks like a possible double bottom, strong reversal coming out of there. And you're just not that overbought on your weekly. So you could definitely start making a move up there, right? Maybe attack those if they continue to levitate this market, a la the third year of the presidential cycle. For about the next month, it continues to levitate higher under that analog or scenario. But I did see, on another note, I did see some decent UOA that actually paid off quite nicely. I think that we had in UOA Pro for some of the names in here. I think we had FCX, I want to say, that we had in here, and that had a nice little scamper recently. And then we had I think we may have had Valet and something else. I think it's called Valet. Isn't that in this space? Well, anyway, it did have a nice little move. We did see paper in there. That was, I mean, not my style of trading really, in terms of like trying to, but I just felt like there were some nice technical signs that were worth a reversal trade. And sometimes they work out, sometimes you gotta look at it that way. It's what's there to trade potentially because of the UOA, and the UOA absolutely nailed the timing on that one. So fundamentals. Yep, iron ore, iron pellets, key raw materials for steel making and producer of nickel. So there you go. That is what we thought it was. So there you go. Those two did see paper. They did work out. And maybe there were a few others too. But that just kind of shows you in terms of basic materials what's up. Now XLI, this roared. This thing really roared quickly as well. This is the daily view. I think we got up towards the lower 60s here kind of quickly after they gapped and moved that up. It's all about and I'm on the wrong chart, sorry about that, it's too busy, but they did move this thing up very quickly, broke it out, excuse me, even took out these highs. I think this is ahead of itself. If you look at sort of like your 4 hour, you're just a little off from 70 despite this pretty big reversal on Friday. So you got to be careful there. I wanted to check out the weekly here, and the weekly, I really like that weekly chart. If there's risk, if there's risk on that continues, I would expect this to break out. I would keep an eye on these highs. That's 104.18. 104.18 is the highest high that I think well, maybe not. Let me double check this one. Yep, 104.18 is it. So you get through there, you would be leaving a nice consolidation behind where it held on to the majority of its gains from the low to the highs, and then it had rested effectively right for 8 months or so, and then you maybe get a burst and you go attack those highs. So that could be really interesting, and where that would project to. And I don't know. Yeah, I do think this projection looks like it could be based on that. I could probably tweak it a little bit. But, the projection that I have on there right now that I think is pretty reliable, even though I could tweak it so it would change by pennies. But that projects to here, and certainly if it can get through this high, I'd start thinking in a bull market type environment, I'd think the odds are that it keeps going. So again, starts breaking out, even if you're like me and you don't really believe the story that's being sold to us, you just go with it as a trader, and you hopefully participate and do well with it if that scenario unfolds that way. But I mean, that's hard to argue with in terms of, no, I hate that. I mean, you might say, well, why would you want to buy at the top of the range? Well, I don't. I want to buy if there's a breakout and the whole market is going, not at the top of the range. So I'm willing to, in other words, this is a great example, I think, of one where, unless you're playing it really tight to the vest, this kind of leaves people scratching their heads when they first come into trading. But I'd rather buy this at a higher price, right? I'm much more interested in buying this at a higher price than I am right now. And investors, right? People are investors, so they wonder, well, why would you ever say that? But the reason I say it is because I would. I mean, I think if it's breaking out and the market's acting really well, that's when I want to buy, rather than buying here, knowing that I might get in trouble because this area really about a point away, it has been tough to get through, and that's all I might get on it. If you eke out a little win, fine. But if you don't, you don't. It's still an okay trade. It's just that it doesn't have the big potential in my mind until it gets through 104.18. But tough to hate that, honestly, at this point. And we have to give the bulls their due, even if it doesn't make sense to us to do that. So we did talk about XLU. This is the one thing I think that with XLU acting this way, I think that you have to say, well, it's coming off a low and it's a little bit, right? It's thought of as a defensive sector. just like the XLP is to a degree, and healthcare is, which we'll cover. So be careful, right? Because they're starting to come after that. It's nothing extraordinary yet, but that is starting to say, well, I'm ready to start attempting to do better maybe. So what they need to do is have a shallow pullback here, hold, and then go for that. And I'd keep an eye on that, because if the market's not doing all that much in churning and you see them coming after XLU, that could portend, right, that a more defensive phase is about to unfold. Uh-oh. Something happened with the operating system here. Let me stop the share for a second, see if that frees up some resources. Something got strange there. I might have to call this for us. I don't want to, because continue. Okay, think or swim is not liking something. Continue. Hopefully this will come back for us. It did. Okay, let's get through. We better get through this. So we covered that. XTN, just take a quicker look, better look at it. We did look at that one. Sorry, I meant XLY. What am I thinking? We did look at that one too. I'm really off now. Yeah, because I had my plan on how I wanted to cover this. Let's take a look at XLRE. This, to me, again, this is something that really, to me, is defying the logic. Oh, it doesn't look like it's giving the shares. No, it is giving us the screen share. Share 4. Okay, let's see if that's working now. So yeah, we didn't miss anything there, just think or swim hiccup. But this is looking better, right, with what it's done, but it's holding most of its gain above the 50. It's stuck between the 50 and the longer term SMAs, the purple being the 200. Got to get above the purple, right? And then it sort of opens up more potential. But this, to me, like, I saw some HYG UOA. It's telling me that, right, there could be an issue here. Now, could be just hedgers, but there was some put buying that came in. Already have a put idea on that. They've been able to forestall that. I don't think it's below the trigger anymore, or never. I'm not sure if it made it there or not. Can't recall, but I don't think it's below the trigger at this point. I could be wrong even on that, but I don't think it is. And since it is not, below the trigger, there's no harm done at this point. But I think that's one I'm keeping on my radar, because I just don't. To me, this is a lot of the stuff out there just is not making sense. I'm not buying this. I'm just going to trade it in the short run, wherever the momentum is. But in the long run, I'm still concerned. Again, hoping to be dead wrong. Right, you could see this is really, we could put a triangle lines on here at this point. Not going to do that because of the think or swim issue. So, but no, right, this could break one way or the other. So I guess maybe the Fed is something that could break this, or maybe the aftermath of the Fed could break this. So not that this is a great trader. Some people like trading these big kind of macro theme things, and they're cheap to trade in terms of dollar cost, in terms of options. So we get a good sort of smorgasbord in there for things overall when it comes to UOA Pro. We at least attempt to do that. So that's that one. Now XL, we did, I think, cover XLC earlier. I wanted to cover XLV for sure. So this one has an interesting chart, I think, because it's got this low put in. It's a little bit higher than these lows. It's put in another, look out, buddy. It looks like it's got a little bit of a higher low in place, and they're trying to work it back up. And before you know it, right, this could be through all the SMAs with the 150 there in rust or orange at the top. If I extend this line here, I can get this over a little bit. You'll see that'll kind of run right into where the 150 is, which is nice. So if this starts to do something and get through there, it will at least be attempting to leave this downtrend structure that it's been in, right? This corrective action, and then that could lead it higher. So that's where I would keep an eye on for that. Let's take a look at the weekly chart on that one to see if we can get anything out of it. And it's the same story. I mean, overall, right, you've got to say, well, they've got slightly higher lows getting put in here. And the last couple of highs, though, have been, you had this higher high versus here. It's still a lower high versus here. Now you have the lower high here. So not an easy trader, but yeah, I mean, if it's risk on still, And there's the sleeper scenario where they goose this market towards 4,400 in the SPX after they push it through 432 on SPY. That would be maybe stuff that comes along for the ride. Let's see if I can check out XBI while we're here on something related. XBI, now it's sort of, okay, let's take a look at that. Now it's sort of middling. Excuse me for 1 second. I need to make a move here with this little fella. Here you go, bud. You'll have to come back in a little way there. Somehow one of our pet cats made it in here to my office, and he's a large, call him little fellow, but he's a large cat. He's 22 pounds, almost 23, and he almost got my desk going. I have an electric desk, and that wouldn't have been good. It probably would have shredded my monitors if it rose up too quickly without me stopping it. So sorry about that. But XBI weekly, a lot of noise right near here, right? There's a lot of former kind of resistance in terms of price action. We go to the daily, right? This one here, probably flashing a little bit of negative divergence here, right? So you might say, well, it's not really divergence. Yeah, that's fine. But you can just see that, right? This was a little bit of a higher high, lower RSI readings, similar high recently last week, and similar to lower RSI readings now. So that's a little concerning right now, I'd say, overall. And but at this moment, not overdone in terms of the RSI on that one. Readings near 60. Just trying to rescale things so everyone can see things better. Let's take a look at the commodities. CL. And related to oil, this some of the stocks seem like they started to move. Maybe stocks will be right, maybe they'll keep going, but this really, right, the oil futures are not doing anything special here yet. So it's been a tough area, at times to trade. It really has. You really have to be dialed into that market. But I don't know if you can really be in love with it yet. You might not. I think it might even be more reasonable to be the opposite, because, right, your 20, 10, 15 are all below your 50, which is below the 100, which is below the 150. So you still have sort of some downtrend complexion in place there. So again, I'd be careful on that one. I'd wait to see a little bit more, if not a lot more, reversal type price action before I really went gung ho in there. For me, that would probably start with the oh, that's right, this has been giving us trouble. I got to go to cut or wood, I think, to give us a look at the lumber. But in terms of, yeah, I mean, I'd probably see UOA if I start seeing big time UOA. So cut continued. This is more of that kind of catch up materials, XLI, right? This kind of picked up. Yeah, some of these real estate related ETFs are doing well or hanging in there. Same thing happened here, kind of overall with cut and wood. So again, I don't think anything spectacular is there, but look, if it keeps the higher low and they take out the 150 there and rust, it could be on its way, right? And maybe somehow, right, all the stuff that has been good to me over the last 30 years is, economically speaking, in terms of the future economic situation, is dead wrong. And I'm willing to entertain that. I've been surprised before. Copper futures. July future looks like, and this definitely had a nice little move. We talked about the prior week at the 200 there in purple. So it's got stuck there, not a big shocker. And it's got a square cut out for it even after it gets through there with all the other SMAs. But look, if you want to keep your eye on this and you start to see these commodities start to perform better, that would be a sign. It would be an encouraging sign. It would be more of a risk on sign. Maybe things are not as bad. I tend to think things are much worse than is being reported, because the liars always lie, regardless of what political, ostensibly whatever political party controls this, that, or the other thing. It's always they'll always overdo it. But here's IYR. So that's another real estate ETF. Just keep an eye on that. That's, to me, is not looking all that great. You got to get above the 200 there in purple to start feeling better about that one. So there's, in other words, like just a snapshot in time. Some of these things look a little concerning, right? They're not in great shape yet. They really haven't joined the party yet. Maybe they will, right? That's the thing. Maybe they will, but you just got to call it as it is. And right now, they're just not there yet. And there's the corporate bond ETF. I'm not even going to worry about the percentages. It's not like we trade this, but all right, maybe there's the makings of a higher low. Maybe if we drew aggressive resistance lines across here, this could start to do something. But really, it's more of a big picture thing to me. We're not trading that, but those things we just looked at, they don't look all that wonderful. And then KRE, which was trying to do better and really igniting some things, this hit a roadblock there at that resistance level, and it started backing off. But higher low, higher high, they got made, took out this high. And then, let's see how it acts now. If it pulls back a little bit more and then starts to go again. So it has a lot of room to make back. That would hurt me small because of the position I've got on, but honestly would welcome it. It's kind of a hedge type thing for me in a way. And if I could make the trade where we get a rip roaring market and rip roaring economy and I lose small on the low risk position in KRE, I'll do that trade. So that's that. I'll take a look at that one just in case. I'm going to guess at this point, the weekly is shaping up a little bit better. And I would say it is. I'm so used to using a different app at times, but I would say, look, we've got to be realistic here. If I draw a resistance line off of here, some people won't like this, but I don't care. You could draw one sort of like that. You might be able to say, well, after that plunge was over, I want to have a resistance line there. Some people will like this, some people will not. But you started working your way beyond that, right? And then ultimately, if we kind of just drew one across these, this is where we want to see this thing work its way back up to, which kind of gets you near that 20-week there in light blue. But I don't think you can rule that out. The Fed might be the tonic. Maybe they put more together. Maybe they say, we think in the inquisition that follows the Fed announcement, maybe they'll say, well, we think things are getting better or whatever. And then that ignites the players out there that love to jump on things. Who knows? But you really can't say it's overbought, right? It's at 39 on the weekly RSI, so it's got the room. It's got room to go. I'm not predicting that, right? I kind of think the other side should happen, let's say macro wise, but it is what it is, and give it their due. So it's been a really long sector situation because we looked at things a little bit more in depth to try to find something. So I would say probably a good time for us to wrap things up here. I want to thank everyone for tuning in. I hope that something that I share with you in this week's sector situation or macro measure helps you out this week or some week in the future. And thanks again for tuning in. Everyone stay nimble out there in front of and through the Fed meeting.